Today, Uber's losses balloon. Plus, a possible COVID-19 vaccine takes a crucial next step. And we dig into unemployment in America, with a spotlight on the layoffs ripping through Silicon Valley startups. I'm MacKenzie Sigalos, and this is CNBC After Hours, Work From Home edition. Take a look at the scoreboard. Stocks closed near their lowest levels of the day, but still finished squarely in the green. Now, the big story here is the NASDAQ. That index has erased all of its 2020 losses and is now in positive territory year to date. And let's get right to the latest numbers from earnings season. Uber reported a $2.9 billion net loss for the quarter, twice as bad as Wall Street was expecting, and its biggest loss in 3 quarters. And I also want to mention Roku here. It's one of those stay-at-home stocks, seeing its business benefit from the lockdown measures. Roku's average revenue per user jumped 28% from the same quarter last year. And the company gave some insight into its April numbers, because remember, April is not part of the first quarter. Roku said streaming hours in April grew a stunning 80% from April 2019. And now for 3 of today's biggest developments in the global coronavirus pandemic. First, the FDA has approved an experimental coronavirus vaccine from biotech company Moderna to move into a phase 2 trial. The company will begin this new trial with 600 participants shortly and said it has plans for a phase 3 trial as early as this summer. Moderna also said it could potentially achieve regulatory approval of the vaccine as soon as 2021. Now, the race to develop a vaccine is intensely competitive. Earlier this week, pharmaceutical giant Pfizer began testing its own vaccine candidate on humans in the U.S. Other players like Sanofi and Johnson & Johnson are also developing their own experimental vaccines. And second, New York Governor Andrew Cuomo has extended protection for renters in that state. Now, on March 20th, Cuomo prohibited any residential or commercial evictions resulting from tenants who could not pay their rent for reasons related to COVID-19. Now, that order was set to run through June, and today, Cuomo extended it for 60 days, through August 20th. He also said officials will ban any fees for late payments and will allow renters to use their security deposits as payments. Finally, Google employees are not allowed to expense food while working from home, according to materials viewed by CNBC reporters. Google is notorious for the lavish perks it gives employees, or Googlers, at the office, including free gourmet meals for breakfast, lunch, and dinner at on-site cafeterias. Now, as firms around the world curtail spending in the wake of the outbreak, Google has issued an updated policy saying workers cannot expense food, coffee, fitness classes, or home office supplies while they're working remotely. Teams also cannot use extra money in their budgets from trips and events that have been canceled to order snacks for virtual meetings or donate to the charities of the team's choice. Googlers have taken to forums to complain about having to pay for their own meals, make their own coffee, and wash their own dishes. Okay, let's get to our sound check. Here's a roundup of the day's biggest action and what the top newsmakers and business leaders had to say on CNBC's airwaves today.
You know, we've seen now recently with this virus, we've seen precisely, this is a symptom, right? Authoritarian regimes go to ground. They cover, they deceive, they put out disinformation, they deny their people individual liberties, all the things that we've known for so long. We've dealt with communist regimes before. We're seeing it now again, and we know for sure that this virus originated in Wuhan, China, and that the disease emanated around the world. The Chinese Communist Party covered this up.
I think the right thing to do is to kind of push in the direction of opening up the economy. Now, some people express this as dollars versus health, but that's not fair. It's really health versus health because, poverty, GDP is also a health issue. Life expectancy goes down if there's, if we have a bad economy, if GDP drops by a lot.
I think there should be a special place in hell for people that are trying to take advantage of this program when so many companies are hurting.
It's all going beyond meat's way. The total addressable market for food, for beef, for pork, for chicken, is monster. I think the pandemic is saying start eating plant-based. Now, you may say that that's pie in the sky. And you know what? Pound sand. It's real. And when it becomes cheaper, which it is, it's going to come right through the price of regular beef. I think the adoption is going to be strong. Yes, I am a believer.
Now let's dive into what everyone is going to be talking about tomorrow: unemployment. Tomorrow morning, the federal government will release April's jobs report, which includes the national unemployment rate. All of Wall Street and Washington will be watching these numbers. Why? Well, the last read we got from the Feds on unemployment was for the month of March. The rate then was 4.4%. But remember, lockdown measures only started in the middle of March, meaning that that specific data point doesn't paint an accurate picture of the coronavirus-related job losses. April was America's first full month under quarantine, so tomorrow's data will be the public's first look at the level of employment devastation. And it's expected to be ugly, really ugly. Bank of America predicts the unemployment rate will surge all the way to 15%. To jump from 4.4% one month to 15% the next is jaw-dropping. And today, we learned that more than 3 million people filed for unemployment last week, which is incredibly high, but actually lower than the jobless claims numbers from the past several weeks. Also, we're learning of more layoffs every day. Just this week, United Airlines, Airbnb, and Uber all announced job cuts. Startups in particular are getting hit hard. CNBC's Kate Rooney dug into the recent job cuts in Silicon Valley. She has the latest numbers.
The job losses are adding up, and Silicon Valley, the epicenter of young tech companies, is seeing the biggest effect. Since mid-March, we've seen more than 17,000 layoffs at Bay Area startups. New York was the next hardest hit with about 4,000. Globally, the total has topped 44,000 at VC-backed startups, according to one real-time tracker. Real estate, fitness, and food, as well as transportation, saw the biggest effect. About 2/3 of those employees laid off worked in those industries. And as far as companies, Uber went through the deepest round of job cuts, followed by Groupon and Airbnb. This marks a huge shift in the tech job market. Recruiters tell me a few months ago, those roles were really hard to fill as demand outweighed supply. Going forward, the volume of candidates will make it harder for those job hunting, especially as hiring stalls and VC investors urge portfolio companies to cut costs. Another factor weighing on the hiring process, the interview process can't be done in person. It has to be done over video. So one thing I'm hearing from investors is that what they call wantrepreneurs, or those people that got into tech because they thought that they'd make a ton of money or they thought it was cool, will probably not last through the downturn. Entrepreneurs, on the other hand, and those people that really are committed to their startup and their idea will probably make it through, and they use historical examples like Facebook that was born out of the last recession. So there are good historical examples, and they do say that those committed to their ideas and their companies will probably make it through.
And before we leave, it's time for today's numbers round. Let's kick it off with 33.5 million. In the 7 weeks since the coronavirus took a foothold in the U.S., 33.5 million Americans have filed for unemployment claims. It's a staggering amount of people, our friends, family, and neighbors who are out of work, and yet another unpleasant indication that tomorrow's jobs numbers are going to be rough. Next, 100 million. The private equity firms that bought J.Crew raked in about $100 million in fees in the 9 years since they bought out the now bankrupt retailer, according to the New York Post. The firms, TPG and Leonard Green, bought J.Crew in 2011, and as the clothing company's business crumbled, it still paid hefty fees to the private equity guys. J.Crew filed for bankruptcy on Monday, and it looks like all the debt on its books, $1.7 billion worth, according to the Post, was as much a factor as the retailer's declining sales and profits. Experts predict more retailers will file for bankruptcy. Neiman Marcus is the latest, filing earlier today. And finally, 1.2 million. Rockstar and Guns N' Roses member Axl Rose has 1.2 million followers on Twitter, where he got into a little spat with Treasury Secretary Steve Mnuchin. Now, it's unclear what prompted the musician to tweet about Mnuchin in the first place, but the cabinet member in charge of the fiscal response to the COVID-19 crisis took the time to respond. That's it for After Hours. Stay up to date in real time with CNBC. Get the latest on Uber's quarterly numbers, and we'll also be bringing you those April jobs and unemployment numbers at 8:30 Eastern tomorrow, along with plenty of expert analysis. And catch every development in this historic battle against coronavirus and the unprecedented economic fallout by going to CNBC.com and downloading the CNBC app. We'll be right here in our home office every Tuesday and Thursday with a new edition of After Hours, so be sure to catch us then. And ahead of Mother's Day weekend, I want to send all my love to my Granny Moo, Yaya, and especially to my wonderful mother, the best mom anyone could ever have. All right, everyone stay healthy out there, and we'll see you next week.